Continues to be a ranged trading session yet again, and the market is not willing to snap out of this 150 odd point range that we've been stuck in for a while now. And it was disappointing. Disappointing why? Because you had the Fed uncertainty out of the way. Fed was extremely categorical in coming out with a dot plot indicating that there are going to be 3 hikes next year and another 3 in the year ahead. Turned hawkish, but that's something that the market was in any case anticipating, especially with regards to their commentary around inflation. That said, well, the global markets really rejoiced all the commentary from the Fed, and you had a very strong handover from the US markets. Asia as well closed in with extremely strong gains. Japan held out in excess of 2%. Shanghai as well closed in with greens, and Hong Kong as well recovered most of its losses, closing in marginally higher. That was not quite the case for our markets. While we open gapped up, we were holding about a triple-digit gain. Soon after, we fizzled out from there and then dipped into the red, flattened out, and then made a last mile push to really make it back to the green, finally closing about 0.5% higher and back at that 17,300 mark. Unfortunate as it may be, the broader end of the market couldn't quite recover and snap out of the weakness. While it definitely lifted off from the lows of the day, it was still a count 108 stocks to the declines, with about 82 standing to the greens. Now, what was putting pressure today and what was really holding out? So largely it was IT on one end and pharma along with autos on the other, dragging end. IT, of course, was your big winner today. You've got rupee weakness coming in, which augurs well for the IT industry, which has been grappling with acute wage inflation. And given that their earnings are in dollars, the rupee weakness really aids them well. So that said, pick up any stock from within the IT pack that was holding out just very, very smartly in today's trading session. Starting off with Infosys, which was the top mover on the Nifty, held out by 3% in trade today. There was Wipro holding out very well. HCL Technologies was up 1.5%, and TechM along with TCS as well closed in the green. Similar was the case with the broader end of the mid-cap IT universe as well. So everything from a Persistent to a Coforge, LTI, these were all significant movers in today's trade. Also, you got due support coming in from Reliance Industries. Given its highest weightage still on the index, that stock held out by 1.7% in the futures, and that really gave the index that last mile push and a leg up. Bajaj Finance, after 3 days of a near 8% fall, finally saw some rebound coming in, and the stock held out by about 2.7% in today's trading session. That said, there were a couple of other newsmakers as well. Sun Pharma, which got a US FDA approval for one of the injections, which apparently is used to treat black fungus. There was also TVS Motors, and BMW and TVS Motors are going to develop a common platform. So that was another stock which was in focus as well. And that said, of course, Indiabulls Housing, after that block deal as well, which transpired, that stock went home as a loser. Talk about the losers then in trade, and a large variety of them too. There was TVS Motors, which was actually down 6%, and it was up yesterday. Torrent Power was a rank underperformer, down 6% in trade today. There was PVR, there was NAM India, there was Biocon as well as MCX, which were also laggards. Also, you had some pharmaceutical names like a Cipla, Sun Pharma. They were also dragging today, were down about 1.6% apiece on the futures. And autos per se were weighing heavy on the markets today. So Hero, Maruti, Eicher, they were all laggards today, as was ICICI Bank as well as SBI. Which also were the laggards in today's trading session. So let's keep our fingers crossed. Let's see how the next few days actually pan out for the markets, and whether or not we continue this consolidation phase and being stuck in this 150 odd point range that we've been for a while to come.